Tests. See some battery life on this one. All right. Kirk, Captain Kirk, do you hear me? Are we all good on audio? Nice. Kirk, is that okay that you can hear me, or okay that you are registering that I said my microphone died? Okay, fantastic. All right, so we have the daily here. We've taken buy side out, we've taken some sell side out, and traded all the way back up. So what could happen now? Well, we have started to see some short-term lows, meaning a higher low, a lower low, and then a higher low that I deem as a short-term low. And same with this, higher low, lower low, higher low. For the time being, I'm deeming this as a short-term low until it's proven otherwise. But this basically is telling me that, hey, we are seeing people are starting to layer in some of their sells. So while we still, from a candle body perspective, we are still within this range here, we are inclined to see if we continue to the downside now. We do need to see what kind of liquidity we have to the above us, and in order for us to see that, we can see on the daily that we have this bearish order block here. So this whole area, I want to see if price rejects, maybe comes up to the consequent encroachment of this and then rejects potentially. I want to see what happens. I mean, right now in Asia, we see that there is some price movement to the upside. So what I would like to see, I'd like to see we'll get down to the hourly chart, but I'd like to see a little bit movement up before we head down. So let's go down to a hourly chart now. This is our hourly chart for the week. So we see that where we began the week, we can also tell that we've taken out sell side liquidity here during today's price action downwards. We took out sell side liquidity here. This 15938.75, there's a reason why this is more important and why price decidedly moved down to this mark during today's price action. These all serve as relative equal lows, this being the more standout one, followed by a return down to these relative equal lows. Now remember, I had mentioned earlier that if we come down to these, there's a high likelihood that we will also return back to the new week opening gap. And once we hit that, we'll consolidate. What happened today? We hit that before 11 o'clock. And then we consolidated through lunch, only to skyrocket at the end of the day. So I did point out that we reached a hourly buy side imbalance, sell side inefficiency, and that we didn't necessarily need to go down to here, but we wanted to see if price would potentially bounce here, and bounce it did. So that's we before this action happened though, for some reason I had kept a bullish bias before we knew what was going to happen today. I had seen that this did not make a higher high. I was looking for a higher high to be taken before we headed lower, and we did not get that. and I stuck with my bullish bias a little bit too much today, and I got stopped out here, and only when that displacement got below the new week opening gap did I actually then change gears and end up heading switching over to the sell side. I was buying that whole time, and it was brutal. I was fortunate to get stopped out some of these, but man, it is brutal when you're trying to buy at these short-term lows and you see like one big candle continuing to stop you out. That was a tough one today. Fortunately, we recovered from that. Had close to an $800 day today, so I'm totally fine by that. I'm glad and I'm happy that I was able to see examples like this where price barely fails to achieve the taking of short-term highs. So meaning it's very, very heavy, right? So on the hourly, as you all know, price really dropped down quite heavily through there. What is this here? I think this is the daily order block. I'm going to remove it for now. So we know that price dropped through there and quite precipitously, and fortunately we were able to capitalize on the movement lower into a new week opening gap as a draw. However, could there have been better trading? Yes, and this is a really good lesson to learn. When price is in a consolidation and we fail, we get really, really close, but we fail, there are two options that could happen. Well, one, we come back and we bounce off of some of these lows, these short-term lows, take sell side, head back up and take buy side. Now, with this big of a displacement, this should have been one of the biggest indicators that, hey, people are willing to sell off. Institutions are willing to sell off here. And if I'm seeing price not even get to those buy stops here, meaning like shorts are just really going heavy, well, that should have been one of my key indications, right? Because that same thing happened on a lower time frame. Let's go down to a 15-minute time frame. So we're down to a 15-minute time frame here, right? So similar thing happened where this high did not get traded to. This high also did not get traded to. I would have liked for us to see us trade all the way up there, but it did not. Now, a similar thing happened here towards the end of the day, but price ended up having people cover their shorts and blowing any late shorts out completely with these candles at the end of the day. So I was looking to see if this was going to be a similar situation where a previous short-term high did not get traded to and we would head lower. We did take a short there. We definitely did take a short there, and we profited off of that. But what we didn't do is we didn't keep that very long. So, we took that short, we legged into it, we got stopped out, we legged into it some more. Being so close to the sell side imbalance that was down here. I think there is one that was gosh, where was it? Oh wait, hold on. It was earlier in the day that we took it. Sorry. We were probably just, I think at that time I had been done trading and I was vocalizing that, hey, we'll likely head down to this short-term low, or sorry, this new week opening gap low. I was done trading when price came down to 15,938, I believe. So this was when my day ended, right before 11 o'clock. And then we saw that price continued downwards to new week opening gap. Yeah, so, and that's about where I left. I was done trading for the day there, technically, and there was nothing else for me to do. I think I did end up taking a trade towards the end of the day as it peaked and headed back down to this new week opening gap low. And you can kind of see that on the lower time frame here. So this is at the end of the day. I had noticed that we had finished consolidating. We dropped down, displacement lower. I wanted to make sure this wasn't treated as an inversion fair value gap, so I waited for displacement even lower. I think here I was thinking that it was going to head back up, so I took a long, got stopped out, and now started to layer into shorts here. And then I think I get stopped out here. I re-enter, and then I take profit at the consequent encroachment, take profit at the new week opening gap low, and get stopped out in profit. So that is another example of a short-term market maker sell model that I was employing during this run here. This run, which I was waiting for price to take out this higher high. And so because this was a pattern that showed very close to what happened earlier that morning, I decided to take a short. We'll look down at the lower time frames to see what that looks like. But yeah, so today, I think having seen price displace below many short-term lows on the hourly chart, that is something today that I am reminiscing on and thinking, okay, with this movement below, this relative equal low here, I should have known that, hey, this is likely a Judas swing. And even if it doesn't take out this short-term high, I can look for evidence of it taking this out and heading lower. I think that was key. Let's go down to the 1 minute so we can take a look to see if there was any evidence of that. Okay, so let's go back to this here. Okay, so we see that we have our high back here. These are all 1 minute candles, right? We see that we traded and spiked up there during the 8:30 a.m. unemployment claims. We took out sell side, we took out buy side. Candle wise, we held this high here. We actually had a little blip above there, and then we started trading to the downside, not giving any sort of entry at all. So that, on the 1 minute rather, was actually very difficult, right? So that happens around 8:47. Now, if we take a look at that on a lower time frame, and let me bring that over. So that chart in the background's a minute chart. This is a 5-second chart. So we had seen we had seen and marked out a fair value gap here. We were thinking, hey, maybe we treat this as a inversion fair value gap. So what we see here on the 5-second here, we see a short-term low created. We see a higher high taken out. And then we see price head down into this area, creating a displacement. Price reaches back up into this volume imbalance, starts to head south towards this short-term low. We have fair value gaps created and entry, entry, entry for us to continue lower. Now, my bias was still bullish at the time. I wanted to see this get broken, and then this would have been the next entry, but I was late on that as well. So this is why I tend to look, if you have screen space and you get, if you have a few screens, I mean, it's not worth looking at until you're at a key level. Because if you're looking at a lower time frame, like it doesn't matter if you're looking at a lower time frame when you're not at a key level, because you're going to get psyched out if you don't have the greater direction in place. So we see on the minutes, we pretty much we get a few retracements here when we hit certain sell side liquidity. We get a few retracements and continuation for the day until the end of London close, where we start to retrace and we see price start to make some higher highs, and it takes sell side liquidity and busts open at the end of the day. I could not have predicted that end of day spike, but we did notice that in order for price to move down further, we need to potentially head into a premium. So the question is now, what would be, and let me go to the hourly chart for this, this will be a little bit easier to see. What would be the amount that we could potentially retrace to? Well, we're going to take the candles of this highest candle. We're going to take the candle body. We're going to draw Fibonacci to the candle body of the low here. And we can see that we're already traveled up to the equilibrium point of this swing low. We don't have to go all the way from this one all the way down because we've created another swing high here. So we can just take the most recent dealing range that we have and work with that. This tells us that we actually got above the midpoint of this swing here. And so we retracted from there. We might see a little bit more movement. Maybe London takes this and heads downwards. Maybe London takes this, heads downwards, takes it once more, or maybe it creates relative equal highs, heads down to this buy side imbalance, and then takes that and heads back up, ultimately to head lower. So these are the type of scenarios that I'm running through in my head beforehand to think, okay, well, what could happen? Why could it happen there and not anywhere else? And of course, with our weekly targets down below here, there's a short-term low right below it. And if we blast through this on the downside, we could very well reach into that weekly. I don't know if we're going to do it today or tomorrow rather, but it is a feasible option. We are waiting pretty much for this buy side imbalance to get engaged. So that's roughly a synopsis of what occurred today. And I learned a lot of good lessons today. Not to solely wait for buy side to get taken out if we see displacement lower. I think it's worthwhile mentioning and worthwhile paying attention to. And not to hold my bias too strictly. I know that the trend has been to the upside, but today it does look like we have started to buck that trend a little bit. So a retracement is perfectly in order, and that's what we'll look for tomorrow. We'll look to see if we can maybe create a higher high, maybe reject off the new week opening gap, and then head back downwards. We'll have to see, because a lot of days that Powell is speaking, algos just take that day and rip it, like pure seek and destroy whenever Powell is speaking. So be careful during Powell speaking. If you're, what we'll try to do is we'll try to aim for being here before 7 a.m. So being online by, let's say, 6:45. I'll try to aim for that today if I can. But you know me. Sometimes my alarm doesn't go off, and then I come on at like 8 in the morning. So I'll start to try to go to bed earlier, but I do have a lot of studies to do tonight. Okay. Kirk's Townsend, ES took the buy side in the morning. Could that be SMT to take? Let's take a look. We have ES here. So let's take a look at the hourly candle on these days here. So ES is on the left side, NASDAQ is on the right. So ES took buy side in the morning, so right here. ES took buy side, higher high at 9 o'clock. So this is 9 o'clock here. Uh-oh, I just lost my ES. Come back, ES. There we go. And yeah, so E-mini takes it here. This absolutely is SMT. Now, a third one that would have validated this would be Dow. So ES took the highs there. What did here's Dow, right? Is this on? Man, Dow just slaps different apparently. Dow just ripped the whole day, which is ridiculous. Compare these two charts together. Right? This was for the whole day today. What a ridiculous day for Dow. So Dow had basically created a low to, I guess, London low to, there really wasn't anything here. It just was pointing upwards. And so we have Dow completely disjointed from what happened today at on NASDAQ and ES. These are kind of, when there's all three indices out of sync with each other, that makes for some really tough price action. But yes, I would say, Kirk, that SMT divergence absolutely could be treated as a higher high here and a lower high here. Because I have one screen that has everything on it, I don't typically have enough screen space to go and see that we have a higher high on ES, but not on NASDAQ. So unfortunately, I missed that. But yes, this is a day where SMT concepts would have helped out there. So good eye, Kirk. Good eye. I haven't had a ton of luck with SMT in the past. I've just been faked out a little bit too much by it. So I haven't used it as much, but it sounds like I need to start adding it to my repertoire. That divergence would have allowed us to see that ES has taken it, but NASDAQ has not. So we're headed much lower, and kind of use that as a supporting technique. Okay, so good catch there. Outside of that, I want to also note that there was nothing on the real-time hour chart which could have given us an idea of what might have occurred. There technically was a reach up into a sell side imbalance, buy side inefficiency in the 5-minute time frame, but it would have moved too fast for me to pay attention to it. So LP trades, what the fuck is happening with Dow and NASDAQ on the daily chart? Yeah, right? There's some really interesting pushes on NASDAQ. So my thoughts are this, LP trades. We have this short-term low here, and this one as well. We saw this kind of serve as an initial mitigation, but price is heading up towards it right now. I would be interested to see if price in Asia and London continues to break this mitigation block and then head up to this one here. Potentially there's even this one up here, which was one of our original bearish breakers that we were looking for. But price doesn't have to get all the way up there. It does have to go into a premium before it can go back down again. So I'll be watching this hourly area here and these two short-term lows within that hourly. So, but good questions here. Lots of good things learned. Yeah. The Dow candle has, I just looked at Dow and they are completely disjointed. Dow is ripping for some reason, and the other indices are kind of still in consolidation. So, until we see the markets in conjunction with each other, we probably will not see major trending days, weeks, months. We'll still stay within this consolidation for a time being. Okay. So for tomorrow, I would like to be done trading by 10 o'clock to 11 o'clock, silver bullet, because Powell starts peaking at 11 o'clock, and I just really don't like to, I don't like to trade during Powell. So, I don't know. I actually have to work tomorrow, so I might not even get the chance to trade with you. I will start the stream. I hope being up early we'll see some price action at 7 o'clock and be able to take a few pips there, or ticks there. But if I'm once I hit 9:15 and I have my first calls, there's a good chance that I won't be able to trade even at 10 o'clock in the morning. It just depends on what kind of meetings I've got. So I might not be able to trade with everybody tomorrow, but keep in mind, I am also not planning on trading during Powell. I just don't like the price action during that time. It's not fun. Yeah, I think that's about it. If we can get a few pips, then we will get a few pips. Cool. So I think that's it, though. There's really nothing left for us to do but wait for Asia and London to see if we continue to reject this short-term low and treat that as a mitigation block, or if we come back to these short-term lows here. There is a lower time frame breaker there. We do have a low, high, low, higher high here. So technically this whole thing on the hourly is a breaker, but obviously if you go down to a lower time frame, you'll find the lower time frame bearish breaker. Don't know if we'll trade all the way up there, because this sell side imbalance on a lower time frame, that one will serve enough, because what we have there is a confluence of a few things. We have the confluence of this short-term low being in conjunction with this area. And actually, this is on the 1 minute time frame, so I can show you this. So what do we have? Why are we choosing this sell side imbalance? So we know that this swing high to swing low, it's roughly like this, I think. The candle close on the hourly would be more impactful, but we see that we have optimal trade entry here. We see that what we also see is that despite this short-term low being here, it's actually still within this optimal trade entry area, whereas some of the other lows are not. So that's why we're choosing this low, at least these two lows, one of these two, right? We're checking to see if one of these two lows would fit, because they fit within the optimal trade entry time frame. Now, this one might be a little bit more impactful, the one at 16,013, primarily because it's right above a new week opening gap. There are no clear large fair value gaps here on the minute. There's one little itty bitty one up here, which would be pretty close to this sell side imbalance. But for the most part, I think taking, I'm going to be looking to see if we sell short around here, maybe spike up to that little one and then take it out and then head back. There's this new week opening gap that is also there too, serving as a balanced price range now. And of course, our optimal trade entry, 61 to 70%, is roughly right in that spot as well. So those three confluences make me lean to believe that when we get up there, we'll end up going short again. So far, we haven't gotten all the way up there, but I think that we absolutely could see some upward motion before we head lower. So let's extend this out to today, Friday at 5 p.m. And let's get rid of these here. Great. Okay, so we know that this is going to be here for a while. We need to see if price gets back up to it. If it does, I'm thinking that's still a short that we would take. So I think that's it for today, though. I don't want to keep this super long. Just as a heads up, Inner Circle Trader also did post a video regarding NASDAQ future housing sales sell side delivery. So what was interesting about his movement here, he took the 1 minute chart. He waited for displacement lower. He saw these were creating more displacement lower. He saw a retracement here, and then we saw price head back up here and take this out. And that's where he entered short, coming down from 15,980 down to 15,930-ish area. Or 38 rather. So about 40 handles. So makes sense when we see such large displacement after a week of rising. So I'm going to keep that in mind for future when we see a Wednesday peak. I'm going to keep an eye out for displacement and keep an eye out for that type of signature so that I know, hey, if it's this type of signature, I now can sell short for the duration of the time where we're trading. Kirk needs your opinion on the difference between reprice versus rebalance. Okay. So rebalance, excuse me. So let's say that, let me see if I can find an example. For your intents and purposes, it's probably, let me see if I can find one on the lower time frame. Okay, I can maybe use a real-time chart. It'll be easier to show you rebalance here. I can show you, I can talk through rebalance, but reprice, I don't really care. I mean, that's not a huge concern on my side, but let's take these liquidity voids, for example, here, this open here. So we had price trade up through it. We've seen price trade down through it. And once we got to we only have had down motion through this volume imbalance so far. So there's only sell side through this. Once we get a candle close buy side up through this, that price range is now balanced. If price comes back to it, this is the whole premise of an inversion fair value gap. It must be a balanced price range first. So if price sees only one paint stroke, imagine you're taking a paintbrush and you're painting all the way down, right? If you're only painting from top to bottom, that's only one swipe. typically you want to paint back up from bottom to top, right, with those rollers. So what you want to do is you want to see price come back through and rebalance this range. Only then will it turn into a totally balanced price range and can be considered as part of an inversion fair value gap. That is the only reason why we mark things as inversion fair value gaps, is where we have price still having to move in a direction, or maybe has moved in one direction, needs to move in the other direction. As for reprice, honestly, I would have to go find a video where he talks about it. I do not know what he refers to when we say reprice to some price. Haven't seen it in a lot of videos, but I also don't really, it doesn't impact me very much. So, if I come across that, I will let you know, but I'm not going to look super hard because it doesn't impact my trading. Is that what ICT did today? What ICT did today on his sell side delivery, I don't think that ICT necessarily did that today on NASDAQ. What he went in on was a run on stops. He saw that we were heavy. He saw we ran stops here and took this down to a key relative equal low level of 15,938. He figured this because price had been moving very quickly, and they didn't have any time to go back and retrace at all. So once we saw this being sold off, he entered here and took that down to 15,938. So I think he was just taking a run on buy stops here. But yeah, go ahead and go back and watch that ICT video. It's about 11 hours ago. He definitely doesn't say anything in the video, but it definitely works. And that was one that I think we had taken as well. Done at 15,938. Okay, cool. All right, well, today's session will be a little bit shorter. Good questions, everybody. Excellent questions. Unfortunately, I do need to get going as I have to take care of a few things before tomorrow morning, and get in a little bit of studying and sleep early enough so we can wake up for 7 a.m. price action. So I will try to be on around 6:45, start the stream 6:45 a.m. if I can wake up that early, but might be just minutes before 7 a.m. as well. But we'll see. So, all right, I think that's it. Everyone, thank you very much for joining, and hope you have a good night. Make sure you drink a lot of water, get some good rest, get good amount of sleep so we can get to trading tomorrow. Okay? Take care and have a good night. Kirk, good seeing you. LP Trades, good seeing you. Appreciate having you on, and we'll catch up tomorrow. Good night.